Hi, this is Brent with Trade Therapy, and welcome to the Trading Couch. We were talking about NVIDIA, our clarity spotlight last week, and still the apex predator in the semiconductor space. This is a chart from back in May. We had framed this as a reaccumulation structure following a strong markup campaign. NVIDIA ran into a buying climax that eventually developed into a terminal shakeout, which undercuts the entire range. Similar to our schematic right here, after accumulation, you see a strong markup period that runs into a buying climax, then goes sideways and is undercut by a terminal shakeout. That's what this last shakeout in April was, undercutting this entire range before moving on with its markup campaign. That's what we left in the last time we covered NVIDIA back in May. This time, let's get started taking a look at the leveraged ratio chart. This is NVDU by NVDQ, the long versus short. It's a great way to get a really quick view into institutional positioning, a clear lens into the leverage trading environment that will show how institutions are positioned. You can see this reaccumulation structure that we just looked at back in with NVIDIA with the terminal shakeout here. See how high these volumes are. These smaller candles on high volumes tells us that this is distributing out. They are looking to come down and undercut that range. We're not seeing that here within our current setup. We see small candles, but they're on relatively small volumes. That does not tell us that this is distribution. This tells us that this is a typical run-of-the-mill profit taking. Although it is September, we are looking for some sort of a back test here of these rising moving averages. Our best guess at this is going to be this doji candle right here, and the potential for this ratio chart to come down to its 21-week exponential moving average. So volume expanded here going into distribution when they were looking to undercut the range. That's your tell. When it gets up here, again, we do not see volume expanding. We see it constricting. That's reaccumulation, not risk off. If we take a look at the longer range weekly clean chart here on NVIDIA, love these long-term charts to get a feel for the overall general health of the trend. You can see that NVIDIA, after its reaccumulation phase, has gone right back into its markup campaign. We do see that sideways action right here that we think may be undercut as we get into September, but overall we see a very healthy series of higher highs, higher lows. All of our moving averages are sequentially aligned and turning up. Very healthy looking ongoing trend for NVIDIA. If we zoom in closer into the daily, we can see the setup for the potential downturn here. We are looking for possibility of this low to be undercut here and potentially coming down and testing the top of this reaccumulation range. Those would be our two targets. We take a look at the daily chart today, we can see that low did get undercut. We do believe that there is still the chance that it does come down and back test the top of this structure here at 153. We do see bullish divergence, but that looks like it's quickly invalidating. If it gets down below this low right here, our divergence will invalidate. If it gets down below that low right here, it means we're likely headed back down to retest the top of this range. All in all, we're long NVDU, bullish on NVIDIA. This is what we teach every week in Clarity, how to spot when Wall Street is building positions while retail is distracted. The opportunity isn't in the headlines, it's in the quiet basis. That's all the time we've got for NVIDIA this week. We'll see you next week.